Welcome and thank you for clicking on my video. I really do appreciate it. And it's a good thing that we bought some shorts yesterday. That's right. NVIDIA actually did give us the signal we were looking for yesterday. And this is what we were saying to watch out for today was watch NVIDIA. If NVIDIA really starts to tear down, the market can tear down. And that is why today was so important. And that's why the thumbnail of yesterday's video was literally tomorrow kind of means everything. Tomorrow means a lot and tomorrow is today. So we're seeing a downturn and we saw the reversal signals that we're going to talk about as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, NVIDIA, AMD, and Meta. Going to look over at AMC and GME as well. Now that NVIDIA is tearing down, I think it's a good time to look at that with GME's daily reversal signal that can confirm any moment. It actually confirmed slightly today, but didn't end up holding to the end of the day. So we're going to get into a lot of things. We're going to be talking about weekly ranges. If you're ever confused about weekly ranges, we will try to explain these videos and you can show up live tomorrow morning, maybe ask a little bit more about them. But right now, I think it's just important that we get you those daily expected moves for the SPY and get into it. We are going to talk about NVIDIA later in this video, but first we got to get to the SPY, right? It is very good if you're trading an individual stock. If you love a couple of stocks that you trade, it's still very good to see what the overall market looks like. And when I say that, I mean the SPY and the Qs. It's good to look at those, good to look at IWM and the Dow Jones as well. So what we want to pay attention to here is, well, we need those daily expected moves for tomorrow. We do have 583.05 to the upside and we have 576.69 to the downside. Now this is your 68% zone for tomorrow and we got our big 68% zone for the week, okay? So this means that 68% of the time we will close in this zone. We closed out of it today, which is something I was leaning towards yesterday, and now it looks like we're seeing some downside, mainly closing a cup. So something very quickly that we need to pay attention to on the 30-minute is if we create a handle, even if we go all the way up to a daily expected move, we can start to break down again, all right? We want to see if this thing is turning back down. Now, this is overall going to be a structure that you want to be paying attention to head lower, right? We can make a measured move. We can pay attention to that. That would be a good way to head lower. But that doesn't have to happen. Okay, if this actually gains some steam and we buy this thing all the way back up and we cross up on this MACD, then it's a little different story. Test the highs, go make a new one is what could happen there. So there's kind of a bullish take for you. As we can see, we want to see if bigger time frames are crossing over, and boom, it has crossed over. You have multiple point divergence from this point over here. You have a triple divergence on the MACD. You have multiple point divergence here for that RSI, okay, going all the way across. So what we want to pay attention to is this really going to confirm down the daily chart? Because right now the 2 hour is saying this needs to head down, and I always follow the bigger time frame because it has better momentum, it has more price action in it, so I trust it a little bit more. So if we are going to head lower, well, this would be a good way to do it, right? Do a little cup and handle on a 30-minute, that would be a good way to do it. But this could just escalate tomorrow. The only thing about the SPY, the last thing I really wanted to talk about was the daily has not crossed. So are we in the scenario where we are saying bear market, bear market, bear market, crash, 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 anything like that? Well, technically we can start to talk about it, but we have not seen the confirmations on the bigger time frames. And that's going to be important. Until we see the confirmations on the bigger time frames, we have to look at those smaller charts and make sure we're not going to see some kind of rig move up, some kind of rig move down, some kind of trap. And that's why we want to pay attention to those things with you live tomorrow morning. We do a live show every single morning and we talk about stocks and look what things are happening and try to help you guys out a little bit. If you need more help learning at how to trade around these weekly expected moves, though, you can go down in the description. My course, I told you a bear market is coming. I want to still keep the course at 90% off. You can literally learn how to trade around this stuff and catch trades like NVIDIA, like we just told you at the beginning of this video that we took yesterday. You can find trades like that if you just learn how to trade with those weekly ranges and understand the MACD and RSI. So get those while it lasts. You can get it for $100 right now in the description. A little bit excited today, so I'm trying to slow down a little bit and just make sure that we're looking at this with a kind of objective lens, right? One that says, hey, we still need to pay attention to how we can get screwed. Something that we teach in the course is management of risk, managing your trade. And so we want to pay attention to how we can get screwed. And so tomorrow, I think it's important to look at the Qs and notice that we have 495.03 to the upside, and we do have 486.67 to the downside. Now, something to pay attention to here is we kept mentioning this thick red line is the yearly expected move. This is the expected move that options had priced in for all of 2020. 24. And you'll notice whenever we get above it, right? Whenever we get above it, bad things happen. We get above it, bad things happen. We got above it again, bad thing happening. So that's why we need to pay attention to it. We can obviously land outside of it, right? 32% chance to do that. But as we get outside of it and make reversal signals, it's starting to add up that we might head lower from here. So for tomorrow, you're going to want to pay attention to a similar thing to the SPY. Now the Qs saw a little bit more weakness, down 1.34% compared to the SPY being down 0.78. And so what we want to see here is, are we going to cross back up into positive territory? Are we going to be able to cross this MACD tomorrow? This is a little bit wider range than the SPY. So if we react all the way up to this daily expected move, are we going to see resistance right away, or are we going to break through? That way we can test the high and go make a new one. It is still good, even when something that looks a little bit toppy happens, to make sure you're paying attention to how you can get screwed. So one thing you're going to want to pay attention to tomorrow is the bullish thing, which is this 30-minute crosses up into positive territory. Now, as we look at a 2-hour, you'll notice that this actually crossed right away in the morning with that big downward drop. Okay, this dropped right away in the morning. The bad part about this and why this can lead to the daily scale turning down is because you have divergence all the way across this, and I really like it on the 4-hour. We'll pull up a 4-hour tomorrow when we're live, but I really like it on a 4-hour. Has not confirmed on a 4-hour yet, but I really like the look of it. It's very smooth. So what I want to pay attention to is the fact that I'm confirming a divergence that is on the MACD and RSI at the same time on a 2-hour, and this daily scale can rotate down from here. Now that is something key, because something that happens at major tops, major tops, that is, before we go into bear markets, before we go into crashes, like I think it's like 75 to 90, I think it's 75% of the time, we actually see the Qs make a lower high while the SPY makes a divergence at the alt and makes a new all-time high to really trap people. That is what you have right now. So you have to take this very seriously. And if we're taking any kind of trade to the upside, make sure we're having confirmed signals. That is going to be a key thing that I'm just telling myself every single morning. If I get bullish and this MACD or something looks like it's about to cross, I need to make sure that those things are playing out, make sure those things are confirming. One thing that you're looking for is continuation, right? We need this to continue. You need more of a follow through. Right now you're getting that selling to come in, get a follow through day, cross over on this MACD, and I might be saying, hey, we might be heading down to 463.11 by the end of October. Apple did have a divergence that we talked about yesterday, but we clearly said over and over again, this is one you have to be a little more careful with, because it has not confirmed yet. It has not confirmed yet. And that's something we say a lot of the time. You can see the signal, but make sure that bad boy is confirming before we actually risk anything, because this is bullish. This is turned up in positive territory. This is crossed up into positive territory, simple swing trade, and that weekly expected move was a little bit higher. So if we're going to get to that expected move, well, then this might just remain positive. So if I'm not seeing that turn down, there's no reason for the stock to go down, or at least gain momentum to the downside, until this MACD crosses. And that is key to understand. But for the most part, we said, or at least I said, hey, if this thing goes up here, I'm kind of thinking it's going to be a trap. And we have to be aware of that going forward. The 30-minute is crossing down. It's really positive. We're getting a retest. Is that going to jump right back up and see that cross up into positive territory? Or are we going to see a little, well, it's kind of a weird one, but you'd say cup and handle, but more so just an ABC pattern down is what I would say for this one on the 30-minute. Now, if we go look at a 2-hour real quick, I just wanted you to be aware that the divergence is still holding with this point. So something very good to pay attention to for Apple is going to be, if that 2-hour does cross down on this MACD, watch out, because the daily scale might be suffering a little bit here. And what's the problem with the daily scale? You have one of the most significant divergence I've seen in a long time, with a ton of points. You have quadruple divergence with the trap-like behavior here, and that is something really bad, okay? I don't really know a better way to say it besides, if this daily does cross down, watch those weeklies, because we might be already in a bear market, already heading for a crash in the form of a bear market for Apple. We said a couple days ago, maybe Tesla is giving us a hint. It curled down on its MACD right here. So on the daily scale, this is where it says, hey, there is major weakness in momentum. Notice that confirms. We get a little consolidation, and then we drop down with a big gap. So this was what we were saying. This could be a double top. Pay attention if it's a cup and handle to be bullish. But just in case it's a double top, watch out if we cross over on the MACD. We crossed over on the MACD and it ended up being some big resistance up here. Not really confirmed double top yet, but this is the first signs of bad things happening. Does Tesla have a chance to bounce? Well, right now you're just seeing the regular behavior after a big drop. Not really anyone buying in, but you're seeing some behavior that just says, hey, we're kind of getting out of those oversold conditions. And now if we want to see a bounce, we probably have to make a divergence first. And I'm just talking about this because this is really curvy, really bouncing, I guess, with time, getting up close to that center line. And if that curls down, that means we're going to continue the negative trend. That is what that means when that curls down into negative territory. It means this negative trend will continue, and most likely Tesla tests the lows or makes a new one. So something to pay attention to for Tesla is going into our little buy zone. Do we create some kind of divergence? That's going to be something very, very key. As we go into a 2 hour, you're going to see this thing is very, very negative. We talk about the positioning of the MACD in the swing trading course and in the technical analysis, the using technical indicators course, and that we go through the ranges and give you an option strategy for bear markets. But what we want to see here is this is very low. So is that just immediately going to be able to go right back up and go to all-time highs and do all this good stuff and take out this high and go make a new one? No, it's going to be very difficult because you're so low on this MACD. So even if we do get some kind of random bounce, I do suspect that this zone will hold as resistance. Maybe we go refill a gap and then we end up turning down. The signal you need for this thing to get bullish again, which I don't know if it'll happen, but you need this 2 hour to build up, maybe cross down and give you some kind of divergence, something that gets you closer to going into a positive trend. That is going to be something key for Tesla going forward, but there's no technicals saying that this thing has to bounce right now. Amazon's been great to us because we saw the 2 hour signals here and boom, that was very, very simple for us. And then we said down here, there is a 30-minute divergence and boom, that's a trade that we actually posted to Patreon. Make sure you join the Patreon if you're interested in trading around those weekly expected moves. They're very helpful, but we teach you how to do it in the course a little bit too. For now, we wanted to talk about this, the 2 hour down here, deeper into negative territory with a little divergence there. So you had an opportunity for this to be a good move, but watch out if it curls down, right? Because we were a little bit further down into negative territory. We're not the closest to that line. I'd like it to be a little higher. If that does curl down here, we can see that go into a negative trading trend and continue the trend, right? So if we actually head down for here for Amazon, watch out if it makes some kind of double bottom, some kind of divergence. But if it doesn't, that's going to be a big problem. So as we go into the shorter time frames, the 30-minute has crossed up. That would mean early on tomorrow, positivity would be a likely option. But look how controlled this is. So if we're going to continue that selling, well, then this just has to cross through here, and maybe this crosses down on the MACD and we see an even bigger drop to really go down, get that cup completed down here at this level of about 180.80. That's something I'm paying attention to. But right now you would say, hey, it's going through a bounce. Let's pay attention for upside as well, right? Still curled up and or about to maybe go positive. If that does curl up, goes into positive territory, that's going to be key. Then you can test this high, you can make a new one. The only problem with that is if that new one is created and then you fall down a little bit dramatically there, you will have divergence there. We might just have a little bit more of a trap forming here for Amazon. Those are just a few things that I'm paying attention to for this stock. Now it's time for NVIDIA. Well, that weekly expected move was right above us, and we talked about the divergence that was here, right? We talked about the little 30-minute, right? We saw one right here. We were like, wow, that's significant. Let's watch out if that thing crosses up. I scaled in one more time and boom, we still held the divergence across. You can see very flat on the RSI, but downward for the MACD. I'm paying attention to it because I thought that NVIDIA was the big trap right here of 2024, and that was a massive trap. Right here is where all our signals are confirmed saying, hey, this is going to have some pullback, if not some weakness and momentum that can lead to a pullback. And guess what? Sometimes it's a little bit more than a pullback, all right? Now, this could still just be a relatively decent pullback, right? We still want to treat it like a pullback. We haven't confirmed the big signals on stuff like the SPY and the Qs. So if this 30-minute does curl up, it's a little bit deeper into negative territory. So I am leaning towards a lower high for that if that does cross up. But if it crosses up with some steam, you build back up, you maybe make some good structure and you break through that high, that can be a good thing. Right now, though, you do have a 2 hour that has confirmed down and you're saying, okay, this is not the prettiest look in the world, but there's not really the best reversal signals here, right? So it kind of stayed in our channel, violated the channel, and then went right back down, crossed over on the MACD, slight divergence on the MACD, no divergence on the RSI. So this can still have some time as we're in positive territory to turn up and make a new high. I don't think the market makers liked what happened today because we came out of the SPY's expected move. We came out of the Q's expected move. So I don't think that they were ready for what was happening today. And then that selling came in and they go, oh crap, maybe we need to trick people into options expiration by shooting NVIDIA higher. That is always something you want to be aware of. But just to be clear, the most likely thing to happen for a lot of the things we're talking about today is more downside. Maybe except for Amazon since it's curled up on a 30-minute MACD. So for NVIDIA, the big signal I'm paying attention to is the daily chart, right? I still want to see if that daily chart can rotate down. And the big thing why the development from today is important is because you have yourself some big divergence here, okay? Divergence is measured by the absolute highest point. That would be actually this green bar, in my opinion, right? The green bar, and you take it from the close. So we take it from the close. Even if you're using this red bar, you take it from the close. You don't really take this. You would take this, you draw it across, you say, oh goodness, that is some steep divergence all the way down from this level. So we have to pay attention to it. So if that daily does cross, this is going to be a big problem for the entire market, most likely, because you can see a weekly reject here with a rejection divergence. And look how significant that is at this point. We made a divergence before the last drop, right? Right here, we made a divergence on the RSI, not the MACD at the same time. So we said this is most likely a pullback. And we're probably going to see us try to test that high again. And then what happens? We break through, we go to test that high again. Now you have the potential for a double top for NVIDIA if we reject on a weekly scale. That is why you want to be paying attention. Pay attention if this daily crosses over, because once that happens, it's very likely that we are going to see some big downside for NVIDIA. AMD able to cross down on the daily. So AMD looking bad, closing at the low of the day is not a pretty look. As we get into the shorter time frames, one, let's go into the 2 hour because the 2 hour is what told us there was some major weakness here for AMD. And that's because we had divergence, right? We had divergences last week. We went to some weekly expected move. We saw the divergence form here. We see the divergence forming here. And that led to a cross down. And that says major weakness at this point. We go down, we make that cup, we get that handle, kind of like what we're talking about with the SPY right now, and then look what happens right after that. So 2 hour gave us some good hints. It told us that that daily was going to cross over or had a higher probability of crossing over, and it ended up happening. That's a good thing for us. But the 30-minute here is something to pay attention to at this moment. Dropping, dropping, dropping. Maybe a bounce does come in the morning to retest a key level here, and that's going to be maybe where that breakdown really happened. That cup and handle formed at this area, so maybe a reaction to 160.83 or a little bit above that towards 162.80 gets you kind of going, oh, everyone's bullish again, and then you curl back down because there are no reversal signals here for AMD at this moment. And Meta was good to us, giving us the 2 hour divergence, kind of like we talked about, where we said Meta's giving a divergence that's similar to AMD's right now. We're just seeing that right here. We saw that the first time. We tried to make that move higher above this high, and we kind of made a double top up here, unfortunately, and we actually made that divergence even more significant and a triple divergence. So very close to the center line. Daily chart can cross over from here. We haven't fully lost these lows. That's one thing to pay attention to. So on the 30-minute time frame, we're going to see that this is negative, but it's not as negative as something like AMD. So if this wanted to cross up into positive territory, we can see positivity. Maybe we try to break this high at that point if this can remain positive for long enough. But something I mainly want to pay attention to for Meta with those divergences is the daily scale did cross over yesterday. And I'm not trying to fight against daily momentum. Remember, I think it was at the beginning of this video, I actually said, I pay attention to the bigger time frame and what it is saying. And right now it is saying that Meta, even though it's holding up here and maybe it crosses up and does all that good stuff, well, it's telling me that over the next month or so, we are going to see it pull down to lower prices. And while it's pulling down, we can look for reversal signals, right? Maybe around earnings, but with how stocks are looking right now, I probably will not be touching anything around earnings with Meta. So something key here is the daily is just saying pullback, okay? This is a little different from other stocks. Meta is just saying pullback because you don't necessarily have great reversal signals here. You mainly just see, hey, this is a MACD very up high, it's way up on into positive territory. So if we do some work in here on the shorter time frames, we can maybe base out and see another move higher for Meta. But if it's gonna follow what the market looks like right now, Meta might just have that crash too. AMC, I'm just going to be brief on this because it's pretty much this. If the daily crosses up and we can get through 458, you're going to see something crazy. But I think the interesting thing is GME. GME actually tried to cross up this daily MACD today. right? It flashed green for a moment, and then boom, the stock starts to pretty much barcode at that point. So we're paying attention to it because you have great reversal signals in here, lots of divergence, right? At this low, now you're trying to carve out a little higher low. If you can do that and you get this to cross up, you might see something crazy if you can break through 22.22, and that's going to be something awesome to pay attention to. The 2 hour is what we want to watch here, though. If that 2 hour does cross down, that still means, hey, negativity for now. Even though we look like we're flagging a little bit, this has not crossed and it's going positive, but we got to pay attention if that does cross down. So as we go into the shorter time frames, does the 30-minute have a good chance to turn up? Well, you're seeing a little turn up at the end of the day, but notice that it is crossed down. It's still in positive territory, which is a good thing, but you need that 30-minute to go. And you see how just a 30-minute crossing up right here gets you a good shot of getting through 22.22. So that's what I want to pay attention to for GME. Something we were talking about with volatility was paying attention to the signals here did not complete, so we head down a little lower and then we make a rejection 30-minute divergence here. This is on the 2 hour chart. You can see how that is crossing up. This is what we said to be aware of. The reason that we want to be aware of this is because, one, we have the crash signal still holding at this moment, kind of like a bear market behaves. The volatility behaves in a bear market. You just see the 50 remain above the 200 for a long time. We have that, and we came all the way up to this area. We made that. We completed the cup. Now we're getting a handle. Watch for that 2 hour to cross up because volatility can come back in with some steam. And I think that is going to end up happening. Even if they do some weird things into options expiration for Friday, I do believe volatility has something to say here. As we go into the daily chart, you'll notice that that was not able to cross over, and that's what we were looking for. Okay, we didn't get that full test of the 50, but we went to pretty much the 20, and now we're starting to turn back up. We want to pay attention to this because there's not a lot of times where the 50 remains above volatility, or remains above the 200 for an extended period of time. And we're going through a period of time where this is remaining above the 200 for an extended period of time while we're continuing to hit all-time highs in the SPY. And that is something that is just wild to me. And that's why I'm paying so close attention to volatility. Yes, I do have calls on volatility still at this moment. For the past couple of days, been scaling into that, and we're seeing that 2 hour cross up. So that means we can see some big reactions from volatility going forward. And that's what I want to pay attention to for now. Something we'll pay attention to during the live videos is if we're seeing any kind of rig behavior, if we see reversal signals from volatility and we see reversal signals from the SPY at the same time, we will mention those things live, or if it's not during our live show, we'll post those to Patreon. I believe the main takeaway here is we still have to make sure to pay attention to how we can get screwed, right? We want to pay attention to how they're trying to trick us if our timing is slightly off. So we have to pay attention to those shorter time frames because this daily has not crossed over for the SPY, has not crossed over for the Qs. So we want to pay attention to that. And until that actually confirms, we can't say there can be some dramatic downside, even though we got some pretty good selling in today. So let's pay attention to that going forward. But once this does cross down, I believe we might be heading into that bear market, if not some kind of stock market crash. So thank you guys so much for watching. I really do appreciate it. Thank you guys for liking, subscribing, joining the Patreon, taking the courses. You guys are fantastic. I appreciate you guys clicking on my video today, and I hope you found it helpful. And tomorrow we'll be live tomorrow morning. So if you have any questions about the course, if you have any questions about anything we talked about today, please let us know. Please join us in the morning and come join us. We do have some fun over there looking at a bunch of charts. Thank you guys for watching. I'll talk to you guys later. Hope everyone's safe out there. Peace.